Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the pressure remains on the Chinese economy and Beijing seems committed to tough it out without its usual debt-inducing stimulus strategies. But mainland China equities, as well as those in Hong Kong, jumped more than 1% yesterday after Beijing announced new measures to boost its capital markets, including halving the stamp duty on stock trading, and they were effective immediately. But they opened up 5.5% higher, and it was downward from there. So questions are being asked if this can last much more than a day or two. Yesterday we noted that factories are under pressure in China because export order flows are drying up. Today we can note that this is heaping pressure on factory owners and their workers. Strikes, accidents and staff seeking help with their employment situation are rising now. In the US, the Dallas Fed factory survey posted negative indications, although these were less than in July, and in fact the least negative in 5 months. In Europe, the tight policies of the ECB designed to quell inflation are having a tough impact on new lending, especially new lending to companies. Yes, lending grew in July, but at its slowest pace since 2015. In Australia, retail sales rose by 0.5% in July from June, topping market estimates of a 0.3% gain and reversing from a 0.8% fall in the previous month. But this may not be sustainable. The largest gainers were cafes and restaurants, up because of additional spending linked to the 2023 FIFA Women's World Cup and school holidays. But when you account for population growth, retail sales are effectively flat on a per capita basis, and incorporating the effect of price increases, the result is even weaker on a real per capita basis, running lower between 3 and 3.5% per year. Locally, the IMF released its latest review of the New Zealand economy, pointing out that government spending needs to be reined in. And we have the full details of this review on our website. The US Treasury 10-year yield will start today at 4.22% and down 2 basis points from this time yesterday. And the price of gold will start today at $1,920 an ounce. That's up $5 from yesterday. And oil prices are 50 US cents softer at just under $79.50 a barrel in the US. But the international Brent price is $1 lower at $83.50 a barrel. And the Kiwi dollar starts today a marginal 10 cents firmer than yesterday at just on 59.1 US cents. Against the Aussie, we're down 1/4 cent at just on 92.2 Australian cents. Against the euro, we're unchanged at 54.7 euro cents. That all means our trade-weighted index is now 68.3 and down 10 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.